Hello and welcome back to gameoftrades.net. My name is Peter and today we're going to be focusing on the stock market. Stocks have been absolutely on fire over the past few weeks. So we're going to take a look at the charts and we're going to see if we can identify any opportunities right now. So we're going to start off by taking a look at the intermediate term outlook, right? This is the time frame that we trade on for swing trading. We want to be taking advantage of the big market moves, not the day-to-day price action, but those big trends that you see on the stock market. That's where you can make the most profit in the shortest amount of time. And then we're going to take a look at the shorter term picture, because to take advantage of those big trends in the stock market, you need to go into detail, take a look at the shorter term time frame and identify high probability entries, just like we did right here with this high risk, high reward trade setup that we posted just before the election on gameoftrades.net. And that's what we do on the site with our members. We post analysis, trade setups, trade ideas with specific target stop losses, and we update on these trade setups and trade ideas along the way. Look at this emerging markets trade setup. We also had a trade setup on silver and also an ongoing trade setup on XLE right here. Both trades have been doing extremely well, already hitting our first target on silver, and XLE rallying like crazy ever since that breakout to hit the big resistance level at $55.5. So now let's see if we can figure out the best way to trade the SP 500 right now. So without further ado, let's get right into it. All right, so let's begin by taking a look at the intermediate term picture. We're going to take a look at the market breadth on the SP 500. So more specifically, this is the percentage of stocks that are above their 50-day moving average. And what you get is this indicator in blue right here that goes from extremely bad market breadth to very good market breadth. And you'll notice right here in this last leg up that we had on the stock market, we had a good rally in the market breadth. This is a stronger breadth reading that we've had over the past few months. That's definitely something you want to see, right? What you don't want to see is degrading stock market breadth. Right here, look at this. You had the stock market rise. We were covering that as it was happening, and you had the market breadth absolutely crash down. And that was actually followed by a 5% correction on the S&P 500. But now we're back into a strong market, very similar to June here. We had a huge thrust in the market breadth right here between May and June. Now, this was not a great buy signal in the short term. Look at this. We had a short-term correction back in June. But if you're looking intermediate term, if you're looking weeks or months out, that big thrust in the market breadth was a great buy signal for the stock market. And that's actually part of the reason why we flipped from bearish back in April and May as that momentum was slowing down. Then you had that breakout, and that's when we went from expecting lower lows on the stock market to expecting all-time highs and potentially much higher highs with this kind of move. Very similar to what we had right here in this V-shaped recovery in 2019. You had another one of these big thrusts. Now, that's not exactly what we're seeing here, but this is still definitely showing that the market is in pretty good health for the intermediate term. Now let's move on to the next important part of the video, which is that you should hit the like button as hard as you possibly can. It only takes a couple of seconds and it helps our channel out massively. It is very appreciated. And now on a more serious note, let's take a look at the intermediate term technicals. And what I mean by that, what are the levels that we're looking at? And just by looking at the big important levels, trend lines, horizontal levels, you can get a pretty good idea of where the market's heading. So now we've been watching this price channel right here, and I know I'm repeating this very often in many of my videos, but this is incredibly important to watch. This is the S&P 500, and this is the price channel in which the S&P 500 has been trading ever since 2009, right? We've had ups and downs within this channel throughout the last 10 years. So that's given us certain expectations for returns on the S&P 500. Now, if we start to break down below that price channel, all of a sudden the expected returns start to come down. If we break out above this channel, then the expected returns immediately begin to rise. And that's exactly what we had right here throughout March and April in this big move up We were actually watching that on this channel with this nice bull flag. Here we had a beautiful leg up, consolidation. That's a continuation pattern, and then breakout through. That was a beautiful bull flag pattern. And that's actually something very, very similar to what we had on the NASDAQ here. This is the NASDAQ 100, so the tech sector. And we had a similar channel we were looking at throughout the past decade with price bouncing up and down within this channel. It's not perfect. I can clean it up a little bit to get more precise reactions right here. But back in July, as we had that big move up in the tech sector, a lot of people were waiting for a big blow off top and a correction back down. But we saw this breakout here and we immediately started expecting much higher highs in the NASDAQ, and that's what we've had so far. Once you've broken above this price channel, you no longer have that resistance that limits your potential gains, and that starts to increase expected returns. Now, obviously, it increases the chances of starting to see bubble price action, of starting to see overheated momentum, blow off tops, and we know that's the type of environment that we're in. But nevertheless, you should still pay attention to the big moves and not fight them. You want to be going long on this type of breakout, not short. So now we've established that intermediate term picture on the stock market. It's pretty bullish. We should be looking for long trades. We're breaking out through very important resistance levels as we're speaking. So we're not going to be looking for short trades. We want to have a bullish bias in mind. Now, this is the 8-hour chart of the futures charts. So it's a little bit more detailed than the other chart we were looking at. And here I've put the MACD on just to take a look at what kind of price action we could be expecting in the near term. And you can see we've had a bullish crossover of the MACD, so a flip to bullish momentum near that zero line. So we can take a look at what that looks like near that zero line. So we had the MACD test the zero line from above and find support. At least that's what seems to be happening right now, similar to what happened here and in these previous cases right there. Now, right now, we think we're in this type of scenario right here. And what I mean by that is that these bullish crossovers led to small moves up to take out the all-time high marginally, then correct, and really grind up and down along the way, not making any significant moves, but gently making its way up. Now, we don't think it looks like what was happening here because this was a bull flag. This is not at all a bull flag. This is grinding up price action, building divergence, losing a little bit of momentum. We had a relatively large correction right here where those overbought conditions from that rally were worked off and the stock market was able to rally following that correction. Now, so we think we could potentially get this type of price action where price just hovers just below that line of resistance here with marginal new highs until you eventually get a steeper correction. Now, if you want, you can trade these moves, right? We were watching that downtrend line. We got a nice impulsive candle through that downtrend line that we actually posted about on gameoftrades.net yesterday with potential bullish technicals right here. You can see that downtrend line, and we highlighted a potential crossover that would increase the likelihood of upside on the SP 500. You can trade that for a couple percentage gains, but from a swing trade standpoint, when looking at the broader trend, you don't want to be taking long positions right here. That's so close to a strong line of resistance, very well defined. So that limits your potential reward unless you get a blow off top, which is just not something you should be counting on. And it increases your risk because if you have a correction, this is the nearest support level. So you ideally want your stop loss to be below that. So from that breakout all the way to that stop loss, that's a 5% move down. That's a huge amount of risk for very little reward. So that's the key to being patient in the stock market. If you don't have a favorable trade setup on the S&P 500, look somewhere else. We've got trades on the energy sector, emerging markets. We're looking at the German stock market for trades, cryptocurrencies, commodities. There are plenty of places to look for opportunities. Now, right now in the stock market, you ideally want to be looking for a positioning near this level of support. And we do think that's something that's going to come in the next few weeks. That's why on our Game of Trades ratings across asset classes, the S&P 500 is still on a short-term weak sell. If we start to get closer to this level, that's going to start to turn into potentially a strong buy. Now, that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe to the channel if you haven't already. Now, in the meantime, good luck on your trading and see you next time.